Ladies and gentlemen, welcome to the Excite Technologies, the ticker's EXT webinar for all the investors out there. They released a presentation earlier today. That's why we decided to get the CEO, Bryan Saba, onto our show so he could present in front of all you investors and prospective investors out there. Bryan, how are you?
Good, thanks, John. Thanks for having us.
Absolute pleasure, Bryan. Now, Bryan, let's start with the big picture. You've recently shifted from growing via acquisition to a strategy of growing organically. What has drove this decision-making process?
Look, there's a lot of opportunity in the market, John. We, as a company, Excite Cyber, operate in three niches currently. And those niches, if I was to list them in sequence, is firstly starting with digital forensics. So we made the acquisition of the CBIT business in October last year. With that acquisition, we have the deepest in class digital forensic skills. And what that enables us is to be the deepest in class here in Australia, and I'd bet to argue in Asia Pacific in terms of digital forensics incident response. So that makes us a very attractive sort of organisation to grow organically in that sort of space. Secondly, the second and third niches that we operate in is in the AI, and that is AI governance. Now, as we know, AI is a very hot topic at the moment in the market, but if we're to quantify that in terms of commercial opportunity around AI governance, that's sitting around $1.5 billion here in Australia. And we are very well positioned to take a good chunk of that pie in terms of organic growth, or in the form of organic growth. And the reason for that is we actually have some of the most certified consultants in our business here in Australia, and we're one of very few organisations in Australia that are actually putting out publications. So one of very few organisations that are certified as high as we are, and also one of very few that are putting out publications. And the same is to be said around operational technology, and that is the third niche. And operational technology being, things like pumps in dams, lifts, or machine management. Building management and machine management in factories and so forth. And that market there is around $50 billion. Again, the same is to be said. We're one of the most certified in terms of from our consultancy practice. And we're also putting out a number of publications. And those publications you'll see following our LinkedIn page. Various media outlets are covering those. There is a fourth niche that Excite Cyber will operate in, and that is in the training space. And we're building one of the only cyber and forensics tactical ranges in Australia. And that will also put us in a very unique position. But I won't go into too much detail about that. More information to follow in the next couple of months on that front.
Fantastic. Now, let's look into the financials. You're forecasted over 12 million in revenue for FY25 with a goal of 20 million and a 1.5 million of EBITDA next year. What's driving the growth, and how confident are you achieving these targets?
Look, we're very confident. We've made a number of changes, and look, those numbers that you refer to is only part of the financial year with CBIT included in our business. What we're seeing is huge amounts of growth from an organic perspective. And what I will put it to is we've restructured our sales team. Jasmine Rabinskas, who formerly worked at one of our competitors, is now our Chief of Growth. She's restructured the team and given them a really new focus, grown the pipeline to a number that we haven't seen before in this organisation's history. So pipeline for the next 90 days is currently sitting at 15 million, just short of 15 million. We've actually closed 2 million of that in the last month. So the record closure as well. And we're talking to brands that we've never been able to speak to in the past. So we're seeing huge amounts of opportunity and growth opportunity there. Together, coupled with the skills that we've brought into the organisation as well from a consultancy and services perspective. So look, there is a lot of opportunity in the organisation, as well as in the market in terms of the sorts of customers that we're speaking to. Together with, I think, the acquisition of CBIT, and if I'm to elaborate a little bit more on where the opportunity lays within that business, has been able to introduce us to some of the tier one government firms. And we're seeing lots of big deals coming through that pipeline there in the multi-millions. And that's where I think we've got huge amounts of opportunity over the next 6 to 12 months to grow down that path. And furthermore is our partnerships. So we're really embracing the vendor partnerships that the CBIT vendors were able to establish. And what I mean by that is the Nuix, the Celebrites, and so forth. Really embracing those partnerships with those software vendors, and they're actually walking hand in hand with us, into the market, and we're doing co-selling and joint venture type exercises there. So it's really proven to be fruitful for our organisation.
Now, well done on turning into an EBITDA positive organisation in the last quarterly. That was following the CBIT acquisition, which is very, very positive going forward. Now, what investors are asking is this a start of a trend, and how sustainable is this new momentum in cash flow positivity?
Yeah, look, I think it is. What we're seeing is it is a start of a trend. What we do want to do is look, the EBIT that had been reported is a little bit skinny, and you're going to see some skinny EBIT figures, to start with. What the intention here is to grow that bottom line as much as possible. The challenge with that at times is we make some investments in order to fund future growth or fund future initiatives to grow into the future. That can translate into some shortcomings in terms of EBITDA figures in the short term. But however, I do see it as a trend. We're seeing some good results come from the business, come from the sales team, the delivery team are able to grow. We've been able to actually grow our security operations centre by around 20%, in fact, on the customer front, without actually having to increase headcount. We've been able to do that by introducing various software automation, additional governance, and some AI around what we do in the security operations centre. So the other aspect to the EBIT is not just about the sales, but also when we do achieve sales, is what is the cost that's associated to that growth from a headcount and operational wages perspective. And we're seeing a lot of the efficiencies and improvements that we've introduced come to fruition there.
Fantastic. Now, for those that are not aware, Excite has a number of subsidiaries. Can you talk a little bit about these subsidiaries, how they all fit in, and how do you ensure essentially how they don't run in parallel with each other and create operational efficiencies for Excite as a whole?
Yeah, so look, the subsidiaries that you refer to, and we're referring to them as business units. So we've got Excite Cyber, so the cyber security services that the organisation holds. We've got IT services, which proves to be very profitable and very fruitful in that respect. We've got digital forensics, and we continue to have training in our business as well. So those are the various business units. Now we see IT as a foundational service. It's a service that we have to deliver. So we're going to market, and we are a cybersecurity business first and foremost, but IT is a foundational capability within our organisation. Digital forensics makes us the deepest in class in terms of DFI, or digital forensics incident response. Now, putting all those services together from a back office perspective, we are one business. From a processes and procedures and governance perspective, finance, HR, legal, they're all consolidated as one function. Now, the various business units, they operate as various capabilities within our organisation. One thing that we see, and that I see with various competitors in the way in which they operate, is, and this is, I think, the inefficiencies that originate internally, John, and then they translate into the customer environment later. And what that is the various services and capabilities within organisations. They might have end-to-end solutions, but they operate as separate silos within the organisation and within the service provider. The outcome to the customer is it's almost like an IKEA a shop, being you need to go and source a shelf or a couch. You bring that home, you need to assemble it and put it together yourself. And then you need to keep going out and sourcing various things. And what we're trying to do is give the customer an end-to-end, not just solution, but customer experience, where all the services and the processes, the procedures are all integrated. So it's not just from an entity perspective, but it's also from a overall service fulfillment perspective is integrated. And that's going to give leading class customer experience. That'll attract many more customers to our business. it will increase our customer retention and improve our customer retention, and also make us the leader here in Australia. We've tested that philosophy and that approach with a number of experts, and we believe we're embarking on something quite important there.
Now, you've mentioned the Tactical Training Centre, and you've also Excite has invested quite heavily recently in the Tactical Training Centre,
Correct.
which is conveniently located in Canberra, where you'd want to be, I imagine, if you want to win those big federal contracts. Can you talk us through the strategic value of this investment and how it's going to help generate revenue going forward?
Yeah, look, without going into too much detail, and there's going to be a lot of detail that will come out with this in the coming months as we complete that facility. Look, we're talking to one of the government agencies where we're looking to train approximately 200 seats in the not too distant future, 200 candidates, that is. And the intention there is to increase that to 800 over one calendar year. Now you start to look at numbers and multiply. Seats or candidates will be paying anywhere from $6,000 to $7,500 per course, and those courses could vary. Anywhere from 2 to 5 days, in essence. So the opportunity for growth there is real and is quite significant and material. The opportunity to scale that is quite significant. And so I'm sort of referring to one training course to one federal government department. There's a number of other courses that we'll then be able to fulfill to other government departments. But there's not only that, so that's limited to digital forensics. And then we can really start to scale to the common market. So that being also digital forensics, but also cybersecurity. And that's where you'll start to see some serious scale and some big scale in our organisation as a result. The facility puts us in a very unique position, being that, as I mentioned, and again, I won't go into too much detail just yet, so there'll be media releases coming out about this, it will be the first of its kind in terms of a tactical cybersecurity and forensics range here in Australia. So there'll be a lot of interest from various customers and various prospects to come and use that facility. But not only the customers and prospects, also other software and hardware vendors that will want to be part of that, as well as international. So there might be international opportunities to international export opportunities associated to that as well.
Now, Brian, we all know that cybersecurity is such a competitive space. Where's Excite's real competitive advantage? How does it win the big government contracts or critical infrastructure contracts out there?
Yeah, so as I mentioned earlier, so in terms of critical infrastructure operational technology, we are one of the most certified organisations here in Australia in that space. We have a number of vendors that are wanting to partner with us, and these certifications are of a recent investment in the past 6 months. So there would have been some announcements that some of our viewers would have witnessed or observed on LinkedIn, where there's been certain appointments into our organisation. Some of those personnel hold some very significant certifications, and we're building, it's not just certifications, but we're building the practices in our organisation and around those sorts of services. As a result, we have software and hardware vendors in that space, Schneider Electric being one of those that our shareholders have known about for some time. But with this uplift in terms of our skills and our practice, they're really leaning in hard on that partnership, taking us out in front of a number of opportunities that we're looking at winning in the not too distant future, and that will prove to be very material, fruitful for our organisation. In terms of digital forensics, as I mentioned earlier, that CBIT acquisition, that's really got us into some of those tier one federal government organisations, being part of that panel now, that service panel. What we look to do is not just sell digital forensics into those organisations, but what can we do from a cybersecurity perspective as well. So we're now sitting in with that customer base and understanding what else can we do other than digital forensics for your organisation, for your department.
So we briefly touched on AI, which everyone's talking about, obviously. How does Excite use AI to improve margins and to win business, improve the customer experience?
Yeah, look, there's two answers there. So one, for internal, the way in which we use AI is there's a number of automation and artificial intelligence initiatives that we've introduced internally over the past 12 months. That was part of a reorganisation we did early to mid last year. So there's a number of initiatives and implementations we've done internally, and what that's translated into, if I'm to quantify that, is we've been able to increase our security operations centre capacity by 20% without actually increasing any headcount, and we've still got capacity for more. That was something that we haven't been able to do in the past, and so that's proven to be a real success for not too much of an investment from a commercial perspective. From an external perspective for our customers, one thing that is becoming very apparent is when they look to implement artificial intelligence in their organisation, while artificial intelligence is very advantageous for organisations internally to become more efficient, whether it be producing content, proposals, contracts, reviewing certain materials and so forth, it can actually prove to also be a threat. You enable artificial intelligence in an organisation, suddenly data that you didn't even know you had, which can be quite sensitive, comes to the surface and starts to become available to the fingertips of anyone in the organisation, and unfortunately sometimes externally as well. So that's where we come in from an artificial intelligence governance perspective. Currently that market is quantified and valued at around $1.5 billion here in Australia, and we're positioned very, very well to capitalise on that market currently, being one of the most certified organisations in Australia, and also being one of very few organisations in Australia releasing some publications in this space, particularly targeted at aged care currently. So we're seeing that getting a lot of traction currently.
Now, clearly, Excite is embedded with the defence and government ecosystem, but that also comes with a little bit of policy risk there. So how does Excite ensures that it maintains these government jobs and doesn't get crunched during budget cuts and so on and so forth?
Okay, so in terms of Excite being resilient at times of budget crunch or cuts with federal government, the way in which Excite mitigates that is we don't have the baggage of what a lot of our competitors do in terms of being a business of $200-300 million revenue. There's a lot of baggage that comes along with an organisation like that, and they need to get to a certain price point to achieve some form of profitability. Fortunately, we're quite agile, and so we're able to become quite resilient during those budget cuts. And we in fact actually see budget cuts be quite opportunistic for an organisation like Excite Cyber, where we become the preferred provider in that respect. And we're seeing that through some of our current customers. An announcement will come out sometime soon, and one of those where we're seeing it become opportunistic for an organisation our size. The other element there in terms of being resilient is we don't look at services in silos. So we're having conversations with our customer base in terms of what else are they looking at. So, for instance, as I mentioned earlier, it's not just digital forensics. How can we assist with cybersecurity? How can we assist with AI and governance and so forth? And we look to always deliver those services as a service rather than as a body shop, which we've seen a lot of our competitors do with federal government. Body shopping is an easy way to get revenue through the door, but during times of budget cuts, which I anticipate we'll see over the coming months, if not years, is that your stickiness isn't quite there. So we take a different angle in that respect.
Some investors have said Excite has been a bit too quiet in the market. Too little news flow, not enough profile. What's your plan to lift visibility, keep investors engaged in the company?
Yeah, look, I acknowledge that. We have been a little bit quiet. Part of that is due to heads down, bums up. We've really been busy internally, but that shouldn't translate into shareholders not knowing where we're up to and what's going on in the organisation. So to help improve that, we've partnered with MediaWise, which was announced just a few weeks ago. We've had a number of workshops to lead to media releases, which will probably commence later this month. And that will keep the shareholders, investors, and market in general far more informed about what we're doing, where we're at, where we're operating, and where we're seeing success, and so forth. So the idea there is to become a lot more transparent with what's happening internally and how the business is going. And other initiatives are, working with people like yourself, John, is getting more information out there and getting it on a more frequent sort of basis. So rather than, I think the last webinar we did was in February, I believe, January, February.
Yeah.
We're looking to do this probably every 3 months, and then even bringing that forward to maybe every month, putting a release out. The other piece is around customer wins, which look, we've had intention to do a lot of that, and we've attempted a couple times. There is some rules that we need to abide by from the ASX, and we're reminded quite regularly by our ASX agent that the ASX is not there for marketing purposes. The threshold for a material, what classifies as a material deal that then becomes eligible for announcement, is $1 million. So what we're looking at is, can we consolidate a number of deals that accumulate to $1 million and release that as a news clipping or as an ASX release? Or do we only allowed to make releases of deals of $1 million and above? So we're looking at a number of aspects there. We're looking to leverage the ASX more. We're trying to work with the ASX agent there, or the ASX themselves, and see how we go. But on the other side is the MediaWise partnership that will see a lot of transparency, a lot of information will flow through that channel.
Now, we did mention at the start of this webinar that the focus is on organic growth, and recently you successfully raised funds to fund our organic growth with the funds primarily going to the Tactical Centre in Canberra. But under what conditions would you consider a potential M&A?
Yeah, good question, John. M&A is not off the table, but we're being very, very strategic and very deliberate about any sort of acquisitions we are to make. They need to fit a significant or material part of the puzzle that that forms part of our strategy. It needs to be priced at the right sort of deal. The vendors need to be aligned from a cultural and values perspective. They're in it for the long haul. They're not in it for the short term. So there's a number of dynamics that we're looking at for acquisitions. So we're not just in the business of crunching balance sheets and P&Ls together. That ultimately comes at the cost to the shareholder in the long term. So we're not looking to do that, because very rarely in those sorts of arrangements does 1 + 1 = 2. Quite often it can equal 1, or in worst case scenario, -1. So that's not the sort of business model that we're looking at. We're looking at we do need to achieve a certain scale and size in order to achieve sustainable profits. We believe we're on the pathway to achieve that via organic growth. However, M&A isn't totally off the table, but it's not something that we're looking to do as a core method of growth, to answer your question.
And finally, for investors listening in, and this is the most important question in my opinion, why should they take a close look at Excite? What's the investment thesis? Why now?
Yeah, good question, John. Look, Excite Cyber is one of very few cybersecurity businesses where cybersecurity is first and foremost. There's a number of our competitors that are remaining both on the ASX and in private equity that are operating in other verticals, in other technology services, are looking to pivot and are pivoting into cybersecurity, where we're well ahead in terms of that space. The other piece is there's only 3 or 4 reputable cybersecurity businesses on the ASX currently. We believe we are the leader with the skills that we've got in our organisation and the practice that we've got in our organisation. We're leaders in capability, we're leaders in reputation, and we're a business which is agile, that fits in well with our target market. The other piece is we operate in a number of niches, so we're not a cybersecurity generalist. While we've got all the capabilities, the end-to-end capabilities, we operate in some very unique niches. And as I mentioned earlier, it's the operational technology, critical infrastructure, it's the AI governance, it's the digital forensics, and soon to come, the tactical cyber and forensics range. So we're in a very unique position to really take the lead here in Australia in terms of being the leader in cybersecurity. Will be one of a very few that have been able to achieve a profit in this space, and particularly being listed. We're seeing the success come through now. As I mentioned with one of the earlier questions, pipeline of the next 90 days is just short of 15 million. We've already closed 2 million of that, and that's a $15 million rolling average. We've never seen that sort of pipeline before. We've never seen the closure rate that we have before, and we've never spoken to the brands that we are speaking to now before. So, look, I think we're in a very good position where we've got a rock solid foundation. We've got rock solid capability in our organisation. We're looking to make consistent and sustainable profits, and we're seeing some serious organic growth in our business. And we're not the business that is of the kind that's going to crunch P&Ls and balance sheets via M&A and dilute shareholders as a result. So I think, those four main points there, I think, is quite compelling in terms of, the market landscape and where we sit in that.
Bryan, looks like exciting times ahead for Excite. We really appreciate your time.
Cheers.
Looking forward to doing the next update in a few months' time.
Thank you very much. Thanks very much, John.
All right. Cheers.
Bye-bye.